Hey everybody, hope everybody's doing well. Sorry for the video taking so long. I recorded it again, ran into the same problem again. I think I know what was wrong this time, so I think I should be good. So anyways, so starting at part one, basically just kind of looking at here what my methodology is. Methodology of manipulation, just kind of putting in two different things in here because I definitely go a little bit more in depth on manipulation after this. But basically going through what I do, what I'm looking for when I'm putting on a trade. Not all of these are used for every single trade. Obviously, if we're talking about something like, the NYSE breadth or the S&P breadth, that can't use that if for an individual commodity. So I won't use it for that. But it can also tell me things about liquidity. If breadth is moving down sharply, liquidity is not going to be that good either. Same with liquidity. I can also learn that from things like the yield curve and sentiment. I can also see that in the yield curve. So all these things can be used in different areas. So this is just kind of an overview. So fundamental narratives driven by market trends. So basically what I'm looking at here is I will look at the overall globe, like what's going on in Europe, what's going on in China, and then let's look at what's going on with the price action itself. Then creating a narrative based on this. Because most of the time when we're looking at something and we're just looking at just the charts, or we're looking at just what the news is telling us, or just what the fundamental data is telling us, it's a little backwards looking. It's not forwards looking like the market is. So as we're looking at those things, we have to kind of keep an idea that, hey, I'm going to really look at what the price action is really doing, because that's what's really happening. It's not about, oh, I think price action is better than this. I think people get too hung up on what's better than this. Is this better than that? Is technical better than fundamental? Should I just look at positioning data? What about the book? Like it's those things are ridiculous arguments. It's find your methodology. I don't care if it's, I look at the when I look down the street, my some person on my street has a horse, and this horse runs around the block once a day, and once a day that tells me blank. I don't give a shit really. Have some idea of what you do, make it consistent, back test it, make sure it works, and then go from there. Obviously, the horse example is a little bit ridiculous. Sometimes I go on tangents, but I'm just saying, find something that works for you. I know people who use things like moon patterns. Um, I know people who use nothing but fundamental data. I know people who use, I mean, usually they do look at the chart once they put on trade, but mainly fundamental data. And then people who use nothing but technicals, and then people who use nothing but positioning. Um, what they all have in common is that during their entries and exits, most of the time they do look at the charts. So I do think it's always important to understand a little bit about charting and technical analysis. If it's even just basic, uptrends, downtrends, 200-day moving average, things like what's a rectangle, what does bottoming pattern kind of look like, what does a topping pattern kind of look like, and trends and so on. That doesn't mean trend lines. That means understanding how to diagnose trends. These things I think are important across every single thing you're going to use as a trader. So just understanding those simple things. Relative strength and intermarket analysis. So relative strength, like we're talking about earlier, with something like Europe. And you can start to identify that, hey, Japan, for example, and Europe, for another example, we're starting to show signs of relative strength a little bit before everything else last year. So when I see those things showing relative strength, I go, well, the narrative that the news is running is that Europe is dead. The inflation has gotten so out of control in Europe that it can't go possibly any other way than destroying Europe. So obviously this is going to destroy Europe. This is the end of Europe. This is the end of the world. Basically, that was kind of the narrative last year. Everything's going to fall apart. And then you start to see relative strength in certain areas. And so I'm going to come up with my idea that those areas showing relative strength, they might be a little bit stronger than everybody else is thinking. That doesn't mean I know exactly why, how, or when. That just means that I should pay attention to these areas. I should be open to this moving in another direction, I should be open to these being the outperformers coming in. Intermarket analysis, meaning like something like as simple as bonds versus the CRB index or bonds versus oil. So bonds are outperforming oil. I can say that, people are running the safe havens. Possibly this is looking like a more deflationary environment if bonds are starting to outtrend things like oil, and vice versa. If we're looking at oil starting to trend, I'm going to certainly look at energy companies. I'm going to certainly look at what's going on with cyclicals. I'm going to look at possibly that banks should also follow this, and that bonds will probably head the other direction if oil's really outperforming. So, well, all of these things are important in just kind of diagnosing what I'm going to be looking at and what I want to be trading. Fundamental positioning, COT reports are my go-to. I love going to COT reports. It's telling me what's really happening. It tells me what people like me are doing, what the hedge funds are doing, and then what the actual producers are doing, people who go to the ground to get these commodities and so on. And when they're buying like crazy, the actual producers, the commercials, at that point, I'm going to start looking at that. Hey, there could be a bottom starting here. Commercials are starting to get very interested in these levels because for them, they have ideas of, what if is my company profitable with gold at, let's say $1,000? Maybe not. Maybe your company isn't profitable with gold at $1,000. Is my company profitable with gold at, $2,000? Yes. Where is my company not profitable? What level will it start to go under? Let's say gold at 1,500 doesn't look good for them. So at 1,500, they'll put in levels and they start to buy like crazy around certain levels, understanding their company a little bit better, and not to mention understanding the demand of their product. Is there a bunch of people buying gold right now? If they see that, they'll understand that the demand is high. So they have a lot more data than most of us do, and they see it a lot quicker than any of us can. So I like to look at the commercials for that reason. Breadth and sentiment. So breadth being, the percentage of stocks moving up compared to the percentage of stocks moving down in a sector, index, and so on. I like to look at that just to understand liquidity for stocks. I like to see that just to understand, should we be following this to the upside or the downside? They have global breadth. They have all different types of breadth indicators on stockcharts.com, which is what my go-to is for those type of charts. Sentiment. Sentiment is very important to me. I always tell the story of November 2020 election. And living through the other election with Trump and trading through another election with Obama, like all these things kind of help me to understand where I should be positioned. And as the years move on, I get a little bit better at these things. Of course, experience will always help you. So going into 2020, I had friends that were very nervous about what was happening in 2020. I had, you see the hedge funds were very, very nervous. Basically, everybody was kind of in this stage of, oh my God, everything's going to collapse. And then the media is also running away with stories. If Trump gets in, buy oil. If Biden gets in, or buy oil and energy stocks. If Biden gets in, buy tech and so on. And basically the opposite happened where it was Biden got in, energy and the cyclical started to move like crazy. And tech started to slow down finally. So that was it's an interesting thing where everybody was looking for the market to crash right around the election, and when everybody's positioned one way, the market can't go down very much. So I will always bet on that because I know I'm not going to lose much, but the upside could be huge, and the upside was huge. That was a trend for basically another year. And energy even did decently in 2022. So, understanding sentiment, however you want to weigh it. I know people who use Twitter to weigh sentiment. I know people who use actual, put and call ratios and so on. There's many ways to do it, understand it, and add it to your trading. Back testing. So first I put historical environments, meaning that when I'm looking back at like what happened in the 70s, what happened in the 50s, what happened in the 90s. When I'm looking at that, I want to back test. Like, let's say I create a portfolio, and that portfolio is gold, long. Let's say I'm short copper. Let's say I'm long tech. Let's say I'm short oil, and I want to see how this looks. And let's say I'm long bonds as well. So I'm diversified a little bit across sectors and so on. I want to back test that and see how did that work in the 90s? How did that work in the 70s? How did that work at this point? There's a lot of good information. I think it's called Lazy Portfolio, ETF.com or something. And you can kind of find a lot of data there and then basically pump in the data, code it, and come up with a back test. And so just kind of coming up with those things and understanding how different portfolios would work, how different assets will work in different environments is very helpful for trading. Not to mention, I also back test just entries and exits. A lot of my entries and exits are systematic, meaning you buy here when blank happens, you sell when blank happens. Always have a trailing stop. So I want to see how that's going to work by back testing it through the years. Monetary conditions, many ways to measure liquidity in monetary conditions. Obviously, the yield curve, obviously the actual numbers, obviously, there's many ways to do it. However you do it, understand it, use it. I've heard many people say many different things, so I'm not going to get into all of them. Seasonality, I was going to leave that off, but you'll see me use it, so I just wanted to put this on here. So sometimes I will have seasonality on there, and it's not because I'm trying to say seasonality is great or seasonality is bad. I put seasonality on there mainly to understand that, hey, around this time, maybe I should be, looking at this a little bit more. Maybe I should be doing this a little bit more. It doesn't mean I'm buying or selling on seasonality at all. Most of the time, I'm just kind of understanding things more like real trends happen most of the time at this part of certain years. Most of the years you'll see great trends happen around November till April. And in the summer, there's not a lot of liquidity, so there's a lot more choppiness. So really, I'm not looking for up or down around certain times. I'm more looking for trends happen around this time because there's a lot of people trading. In the summer months, there's not as many people trading. So the market is very illiquid and choppy. So I can just kind of understand those two things and move on from there. So I put after that, everything else is risk management and psychology. Simply put, for risk management, if you lose 1% on each losing trade, and if you make 5% on your account on average on your winners, you can be wrong more than you're right. And simply, that's very simple. You have $100,000 portfolio. To make it an easy number, you want to lose, $1,000 per trade. And that's it. That's all you can lose per trade. And then you want to try to make more than that on each trade. Most of the time you could be wrong more than you're right. And if your averages work out that way, then you'll make money over time. It's very hard to be right all the time. You'll never be right all the time as a trader. You'll be wrong a lot, but you want to be wrong small and right big. And so basically kind of going through the rest of it is psychology. And so I want to also, I think it's important that one thing that's, I think, something that I do in my trading a lot is understanding groupthink, understanding what the market is thinking, understanding what the news is trying to tell us. I think I do a good job of that. I study it, I've looked into it a lot over the years. And I use a quote by Edward Bernays, and it kind of shows the way you could be manipulated by news sources. People see things on Twitter all the time. This guy says he has the best returns ever every single day. He's up every day and he's, screenshotting it and showing you, you never know if that's real or not. And honestly, the ones that are, the ones that show you that they're losing as well as winning and they're going through rough times and good times, that's the people who are actually showing you real trading. Nobody makes money every day. People who say they've done this all the time, they're most of the time they're lying. And then the people who are posting online that saying they're winning all the time. I hear from traders all the time. They're like, man, everybody else seems to get it but me. And it's like, no, that person is just lying. And if they're lying about their trading on there, they're not one, they're not learning anything themselves. And two, they're not fooling actual traders. Like actual traders know you don't make money every day as much as we all wish we did. You can work your best to do it. You can try to do it, but you will have losers. So risk control being incredibly important, but also understanding that that also affects your psychology. So don't let that get to you too much. So I talk about groupthink a little bit, and Orwell brings this up. I think the term groupthink came up after Orwell, but he called it doublethink in his book. And war is peace, freedom is slavery, ignorance is strength is the famous quote from the book 1984. And so if you have something like, if you're looking at, a trend being up, saying the trend is down while you're staring at this uptrend, that could be something bad. And recently I've talked about it, even like and I try not to really harp on anybody else's products or stuff, but if you're and once again, if you have a fundamental reason why you're bearish the NASDAQ, that's fine. But coming and saying like it is technically in a downtrend, or that you're using a quant signal and it's in a downtrend, there are no quant signals at all across the board that would say that the NASDAQ is in a downtrend. If you're using like an actual weekly or daily signal, like there's none. There's none that would say that. So seeing somebody's product all the time saying that, that's kind of like doublethink in a way, like you're basically saying that something is not moving up even though it is. And like I said, you have fundamental reason you want to, and that's something that works well for you, great. But if you're just saying you're using a technical system or a quant system and you're saying that, that doesn't work. And I read about authority figures, and there's a Milgram experiment. I actually have a video up here for the Milgram experiment. If you want to go check it out, it's really interesting. But if basically the premise of it is they took people after Nazi Germany and they were like, how did these people all follow this evil person knowing that he's evil? And what they did was they dressed people up in suits that looked like they were authority figures. They were doctors, and they basically asked them to be in this experiment, and they had to shock this person when they got questions wrong. And the person would fake they weren't really getting shocked. The person would fake like they're getting shocked, they're dying, they're having heart attacks. They would say all these things, and the doctor would just say, continue. And they'd be like, you have to continue. And they would never really threaten them or do anything major to make them continue to shock this person, but they would continue to do it every time. So it's how we can be manipulated very easily into doing things by authority figures. You're watching CNBC, you're watching CNN or Fox, and you see this person on there, and like there was a good one today. Jason Shapiro just wrote about on CNBC or Fast Money, whatever that show's on. I don't watch it at all. There was three analysts that came on and said Apple's overdone, Apple's going down, short Apple, short Apple, short Apple. What does Apple do today? Apple just jumps up, starts moving higher at a crazy rate today. I don't know the exact amount it's up. I'm actually going to look because now I'm curious. But yeah, Apple's up almost 2% today, while everybody's saying, you got shorted today. It's the rally and it's over. But most of the time, that's how these things work. You have people that are authority figures that get on TV. They tell you to do something. Most of the time, it's the opposite thing. And it's not that they're always right or they're always wrong. I'm not saying they're always wrong. I am saying that you have to have your own way of following things. For me, if I look at Apple and somebody says, would you short Apple? I would just say, well, no, for me, it's in an uptrend. It's obvious, like it's not for me. For everybody, it's in an uptrend. There's no signal that would tell you it's in a downtrend. And it's moving nicely since the beginning of 2023. It's been in a beautiful trend. It isn't stopping, and the old adage, don't short a runaway train. Don't short a runaway train. You'll get ran over. And so I would absolutely walk away from that. There's plenty of other things that are in downtrends if you need to short something, but I certainly wouldn't short something that's in an uptrend, no matter what it is. And so people who know me know I have a tattoo on my arm that's based I got when I was pretty young, and it's funny because it's, when you get certain tattoos when you're younger, they can be really stupid. But this one came out pretty um telling for the rest of my life, and it's funny because this is nearly the same thing. So I have people, they're stick figures, and we sat there going back and forth forever about this tattoo. And was I going to do stick figures? Was I going to do could I do real people? What did I want to do? And we drew it up a bunch of different ways, and I always went back to the stick figures. And nowadays it's like, it's kind of funny. I have a stick figure tattoo, but really, like, the reason was everybody looked the same, everybody was doing the same, people were following each other right off the cliff. And so, I think that's what we have to think of when we're thinking of the market and the general public or the herd or market participants, because really people think of smart money and they go, smart money is the hedge funds. No, smart money is the producers, the commercials. Smart money is not the hedge funds. They do certain things, and yeah, like, people look at it and they go, oh, the hedge funds know everything. No, 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 they have great risk management. They know how to get in and out of trades. They know how to do things the right way, but they're not right nearly as much as the commercials are right. And that's where what we're trying to do as traders, we're trying to get an edge. And so following, the public, or following somebody on Twitter, or following these things, you're never going to get an edge, because you're not going to know how to trade it. You're not gonna if you're dependent on some person on the internet to tell you to get into a trade, and you saw it on Twitter to get in, you need that person to tell you when to get out. You need to know their time frame. You need to know all these things that are impossible. And I don't think they owe you, and I don't owe you, a phone call when I do certain trades in and out of them. So if that's the case, you have to come up with your own methodology. And I really don't feel like you have the resolve to hold on to positions and stick to a system well if you don't understand how it really works. Just by following somebody doing it, you're not going to really understand how, like, for example, my systems, I have my 1% loss per trade. I have these things. If you don't understand that, you could be putting on a trade and lose 50% of your account and be like, oh my God, what happened here? And it's like, well, I know the ins and outs of my system. I know if I'm wrong, I'm only losing 1%. I know that I have a stop loss. I know that, all these things are important to know. So this is important to just kind of put in your head about trading systems and methodology. And then there's another thing that I talked about, which was the idea that all trades have to link up, meaning fundamentals and technicals and positioning. If they're all together, it's a good trade. If they're not all together, it's a bad trade. I think most of the trades come together well when, for example, at the beginning of this year, there's nobody in the world who was saying the US wasn't going into a recession. Everybody was talking about recession. The market looked like crap. And tech bottomed, and also tech looked really, really bad. Tech bottomed and has been outperforming ever since. So once again, the fundamentals are the opposite of the technicals. And then when you looked at, COVID happening, when we bottomed in the middle of a shutdown, the market bottomed and started trending up in the middle of a shutdown. So once again, do all these things have to go together for a good trade? Absolutely not. Same with technicals. Some technicians always say, if the monthly and the weekly and the daily are all going together, it's going to be a good trade, nothing else. I find that, especially in equities where mean reversion trades work well, sometimes my best trades happen when, the monthly and the weeklies are trending and in a buy signal, and the dailies in a sell signal, and sometimes that's when the best trades happen. So once again, it's some of these things are a little bit different than people think. So one thing I talked about here was Bruce Kovner. Bruce Kovner was a great trader. If you haven't read Market Wizards, you have to read Market Wizards. One of the best books on trading. But here he talks about, and this has always stuck with me. Now, I couldn't find this anywhere. I actually had to go into the book to find this thing, because I didn't see anybody quote this. But it's one of the things that have always stuck with me on trading, and why, and the way I use technicals, why and the way I use technicals, why I use them and the way I use them. So if I'm looking at what he's looking at was a triangle pattern. So market is stuck in a range, squeezing tighter and tighter and tighter, and then it breaks out of that range into a certain direction. Now, like he says in that, you could argue that it could have been good for the US dollar or good for the Canadian dollar. But the market started going another way a little bit before anything even came out, any news came out. So a couple days before the news came out, it started trending one direction. He follows it that direction. That ends up being the way it goes. And he was in that trade because of his ability to just kind of look at it, watch it, and say, most of the time, someone somewhere knows something. I'm not saying screaming manipulation of markets or any of those things, because I think that's a stupid thing to get hung up on as a trader. Because when you get hung up on those things, you could say that about anything and say every loss is because of manipulation, and you'll get stuck in it. Doesn't mean it doesn't happen. Doesn't mean there aren't situations that are a little bit out of control, but it means that it doesn't matter. The market obviously moved one way or the other way. You have to learn how to create systems and ways to trade it. So I like this because it just kind of signifies how to use technicals, how to use if the market is talking about this thing and everybody in the world is, this piece of news and they're waiting for it to come out. What's the price action doing? Where's the relative strength in this thing that you're looking for? Like that's going to help you get into a trade a little bit better than other people, and that creates an edge. So last but not least, the stock market is never obvious. It is designed to fool most of the people most of the time. So as we're looking at the market, it is true. It's not obvious. When we're sitting out here and everybody's screaming recession or end of the world or something, most of the time that's closer to a market bottom. When you're looking at a market and everybody's screaming bull market forever, it's never going to end. You got everybody in the world talking to you about, I could go to a party. I don't go to parties, but, sometimes I'll get together with some friends or see some friends, and all they'll talk about is, hey, the stock this and stock market that, and Dogecoin this and Dogecoin that. And, most of the time when those are happening, that's when that's actually right when Dogecoin topped, was when that happened to me. It's the shoe shine boy, the story of the legendary shoe shine boy who's giving stock tips while he's shining shoes, and then the crash of 1929 happens. So beware of those things, understand those things, understand that the groupthink of the market at that time might be a little too heavy one way or the other. That doesn't mean to sell a trade. It doesn't mean that, oh my gosh, it's in an uptrend and everybody's bullish, I'm going to get out of this trade. It means tighten up your stops, be open to a trend reversal, and wait for your sell signal. You never know how long something can go up. The NASDAQ, I'm looking at a chart of Apple, that's the easiest one to say. Apple has gone from $125 to $192. That's a huge move for a year. I don't know where Apple will stop. I can't tell you where. But at the same time, I'm going to be open to moving up stops. If I didn't just move up stops, and if I did try to guess tops and bottoms, I would have, let's say you bought the trade around 130. Let's say it got over 140 or 135 is when it gets over some important moving averages. So let's say you buy it there. It made some good money up to 150. That's a good trade. So at that point, like if I'm guessing or saying overbought conditions, which I can see it was overbought at that point. Overbought is a ridiculous term. Things can be overbought for a very long time. I would have gotten out of the trade at 150, and now it's sailing to 190. But I see if I would have kept a trailing stop or not sold it, there's a 40-day or 50-day moving average. If I didn't sell it until it broke that, I would still be in the trade today. So it's important to just kind of understand that those things, especially as if you're going to be a trend following trader, that I can't predict when a trend will stop. I can't predict when a trend will reverse. but I can create systems and signals that can help me to keep my profits as the trend is moving a certain direction. And if I am wrong, be wrong small and be disciplined with my systems. Continue to follow them the direction they need to be followed and not try to guess my systems too much. And people can talk to me about, I always say it all the time, which somebody could come up to me and be like, I was in a tech trade this year, and last year was something else, and the year before was something else. But all I can remember right now is the tech trade, and I was in tech trade this year, and every single person at the beginning of this year had told me how stupid of a trade this was, like every single person. And I always tell people, it's like, Jesus Christ could somehow like come out of the wall and be born again right in my face and be like, I've been to the other side. I know everything that's happened is going to happen. And Jason, the trend is going to change. This is a stupid trade. And I'd be like, that's cool. I'm gonna wait for my system to either stop me out or give me a sell signal. Like that's really how I am. And I think you need to be that way as a trader. I think it's important because if you're shifted easily, you will shift it all the time. Be open to new information, listen to it, but don't move or change everything you're doing. As somebody's just saying something, you never know what their motivations are. You could be talking like on TV. We're talking about people on TV earlier. On TV, you have people who say things like that, and they could be talking their book. They could be short tech. They could hate the tech trade. They could have some, trades against it. They could have put options. People talk their book a lot. And so as people are talking their book, that's going to hurt you because you don't really know what their motivations are. But if you know what you're doing, and if I look at a chart and I just go, Apple's in an uptrend, and I don't even trade individual stocks, so that's why I'm comfortable talking about Apple. But Apple is in an uptrend. It's just in an uptrend. There's nothing else I can do as a trader, and the system and the way I trade, that's it. Simple. It's in an uptrend. And keep it simple. Just keep it simple. As a trader, it's important to stay simple. All right, guys. That's why I would call it the Unsophisticated Investor Series, because I had a person say that to me once because I talked about how simple it is to kind of have a trend following system. And, like, oh, you talked about something. And I was like, well, it's making new highs. It's running. It's in a good trend. And he was like, well, obviously you're incredibly unsophisticated and you shouldn't be trading the markets. And if you talk to anybody who's a trend follower or anybody else, like they would tell you, that's how you do it. That's really how you do it, because if you're overthinking every trend, you can't stick in a trend. You have to, then this is why I think it's important to back test. If you understand your systems and you do run a back test and you see that this system in this back test is working well, you can sit in it. If you don't know that, of course you will sell the trade. You will get out of the trade because you don't trust it. Why would you stick in a trade when you don't trust the trade? So, all right, everybody. Hope you had a good one. Hope that was a good explanation of what my methodology is, and we'll talk soon.